Good day, fellow investors. Reinet Prosus and holding discounts. A great suggestion here from Manuel to look at Reinet Investment SI, Luxembourg holding company, formerly Richemont. Their net asset value was 6.9 billion, the net asset value per share 36, while the stock price is trading at approximately 22.23. They have sold British American Tobacco, so that will be 1.5 billion in pure cash. Then they have some English pension fund management play for 50 billion, insurance, other satellite investments worth about a billion. If we look at the stock price, so 22, 23, 36 is the net asset value, so that is also something to consider there, the discount to NAV, and if it is that, what's the value, how can it get unlocked? If we look at the company, they have sold British American Tobacco, so now what's left is the Pension Insurance Corporation Group with good dividends, insurance company there, so doing well. If we look at the net asset value calculation, it's going up, has been going up at 9% per year over the last 15 years. And here you have the investments. This will now be turned into cash, and we have the Pension Insurance Group Corporation Limited and other plays there around. Here is the announcement of the tobacco sale. All great, but we have to discuss the reasons for various holding companies. First is lack of transparency. If the pension fund insurance company would be a public one, we would have presentations about it, we would read annual reports. Now we can just know what they say. Transparency isn't as great. Now, when it comes to selling stakes, taxes, Luxembourg, how much they will they pay UK taxes, Luxembourg taxes? Very, very hard to know. Plus, they usually have minority stakes. They're not in control of the company, they cannot decide the dividends, they can not do much. The question then is with the management, is it working for you or for their fees? The focus, is it on creating shareholder value or increasing the holding company so that they can keep your job? What will they do with the cash? And if we look here, Reinet Fund intends using the proceeds from the placing of British American tobacco stocks for its ongoing investment activity. So they're likely going to spend the money on some other ideas that might not be paying a 10% dividend yield like British American Tobacco. Then there are other things, Trilantic, TrueArc, Coatue, and they say that that is valued approximately a billion, but that is also an issue when it comes to these companies. You cannot know whether this is really the value there. Also, on their Pension Insurance Corporation Group Limited, we don't know whether this is 3 billion, 2 billion, or perhaps even 5 billion. So it's very hard to know that when it comes to these holding companies. Another example is Prosus. If we look at the stock price is 45, the net asset value is 66 per share for, what's that, a 30% discount. However, they're not just Tencent, they're now looking at the next wave of AI. They were lucky investing in Tencent at 30 million, not billion, million in 2000. So that was a lucky, and now they think they can again be lucky, but this is not Tencent. iFood, PayU India, they just acquired Just Eat Takeaway for 4 billion. So that is not Tencent, will never be, therefore cannot even be compared. If I want to own Tencent at a discount, this is not the way, because they are perhaps destroying value in other ways. And you can see here, Just Eat Takeaway, boom, it busted, and now it's went private. Then there are remuneration policies. The CEO is getting total remuneration 10 million, I see here. Then I see here total 16 million pre-tax gains from options vested, things like that. So you never know what's his incentive to keep getting the 18 million compared to just increasing your value. If it would just be the discount to Tencent, you don't need a CEO. You need an administrator paying them 200K a year, and that is it. However, when it comes to discounts, it all, again, depends on the size of that discount and on the underlying real value of the assets. If we look at discount process, it was 5% at some times, 35, 15, 34, 15, 32, and it goes up and down over time. So when it comes to these, the higher the discount, okay, but make sure the underlying asset is value. So we can make a video about Tencent in the coming weeks. If you let me know in the comments, I need 50 likes on the top comment requiring Tencent, and then I'll do the video. But that is the key. Holding companies, okay, the discounts might vary, but when it is a big discount on the holding company, plus you know that the underlying value is a huge discount, that might make an interesting value investment, especially if the underlying asset is of great value. So I'm not interested in Reinet because it's an insurance company. Those are very tricky to value, especially without transparency. I'm not doing that. We can look into Prosus, Tencent, but again, depending on the price of Tencent, if that is value, I don't like all the other AI hanky-panky things that they are doing, which I think keeps the discount then, taxes on the Tencent gains, and you end up close to net asset value. Thanks for watching. I'll see you in the next video.